Good morning, or I should say good afternoon. How's everyone today? Hope you guys are having a good one. It's Thursday. And if I remember correctly, tomorrow the markets are shut down for Easter. So, I wanted to chime in with you guys today and get a chance to take a look at the markets. This week was a extra busy one for me. Just been working on a lot of things in the background, and so I wanted to get a chance to speak with you guys and go over the markets before the holidays came and you guys took some time off to celebrate with family. I just want to get us all on the same page leading into next week so that we could be prepared for what is to come. All right. So nice to see you all. Can we get the likes up if you don't mind? You guys have been doing really well helping me out with the likes, and I really appreciate it. I've been taking a look at the amount of likes the YouTube videos have been getting, and it's really good. You know, so many of you always come up to me and say, what the hell's going on? You're supposed to have, like, you know, thousands of likes. You should have, like, hundreds of thousands of followers. Like, you're dying here. What's going on? Like, why is there hardly any people following you? Well, it's because people don't like the freaking videos. That's why. All right. You got to press the like. You got to share. You got to, you know, participate. Leave some comments underneath. Tell me, what do you like about the session? Is there anything that you'd want me to address? Anything you want me to look into more? Leave some comments down below. Participate. When you guys do that, then YouTube says, oh, okay, there's something of value here. Then let's share this information with other people. Otherwise, it will stay hidden, okay? And I know a lot of you always say, let's not get this information out. We don't want too many people to know. But at the same time, we're growing the school, all right? I want to grow the school bigger. The school has been growing steadily over the last few years, and I'm very blessed, and things are looking really good, but we should be doing a lot better. All right. Okay, good. Let's get my little pen up here. For some reason, it keeps on disappearing. I don't know why. Pen, where are you? There we go. Buttes, you guys following along with Euro? Have you guys been watching? I made a post. Breaking news. Did you see the breaking news? I hope so. It was breaking news. It's big business. Okay? Big business with the Euro. So I just want to go over this briefly with you and point out to you what I am seeing with the Euro. So the currency markets have been very difficult to read lately. Very difficult to read because of the situations that the charts are in. They're hard. There haven't been any really clear trends. There hasn't been any real clear forces that are in play that are pushing price. So, and we've gone over this several times. And so, but when examining what the markets are doing, especially with respect to the Euro, one thing that we were able to determine was that we had major selling taking place here. Okay, major selling taking place. And it's been continuing and continuing all throughout. And so we've talked about this. In fact, you know, in some of our videos, we've pointed to the fact that shorts have been accumulating, and then they take profits, and then shorts are accumulating. It's been a constant process. Okay, so right now we have long positions. Last time we checked, April 5th was when they recorded the positions, 210,000. You know, quite aggressive. But when we look at what their average size is, and you know, why is that important? Well, it's important because when there's about to be a shift in a dynamic, we'll tend to see their averages change. So that means what they were doing at one point, they're starting to shift. Okay, they're starting to change what they are doing. And so what we'll typically see is the averages. We'll compare the current positions with what the average size is, and you'll start to see something stick out. So in this case, what we have is, if you take a look at here, okay, long positions are 210,000, Average size, 214. What does that tell me? That means their long positions are below what they typically have, which is a good sign if you think price is going to be going lower. With the short positions, take a look. 183,000. Average size, 179. So there's a slight indication here that we're getting that price may just start shifting momentum and pushing to the downside. Another thing is, if we take a look at net positions, what do we see here? They have been very bullish, okay, throughout January and March, and now becoming less so. Now, does this mean it's going to switch into bearishness? Not necessarily, but something to keep in mind as we watch price unfold. So, to me, what is the big indicator is what is happening on the charts. And this is why we spend as much time as we do studying charts. Because, you know, it's great to look at the data. It's great to look at the positions held by the institutions. I mean, they can reveal so much to you when you analyze them and you compare one set of data with previous data. But there's times where it's not very clear, all right? Like, if anybody was just looking at the positions now of the euro, they'd say, well, they have more long positions than short. So why would you be thinking that price is going to drop? Well, if you put it in the correct context, alongside with what is taking place on the charts, then you'd see a clearer story of what is likely to come. So we've discussed euro with the members and with the students several times, the dynamic of what's taking place and why we do suspect that price is going to go lower. So what was the breaking news that I posted earlier today? If you remember, what I was posting earlier today was the fact that price was making a significant move to the downside. And what we suspected was going to take place was that this key area here, and I'll draw it in for you guys to see. There's a key area here, which we suspected was going to be removed. Now, what does that mean and why do we care? Well, what it means is that the institutions had an area where they were interested in buying. So their algorithms were programmed to buy the euro down in this area in between, 107, 108. And so price reacted to that area and started rallying up the charts. But when you look at the overall dynamic of what's taking place on the multiple time frames, what we would have expected to see from price was not only just a reaction like we did get through here, but we would have expected price to head a lot higher. And so when price fails to reach those expectations, it immediately makes us wonder what is actually taking place. So when we saw that price reversed and removed this area of institutional buying and started to make its way down into this area, it became slightly more evident to us that what was likely going to take place was that they were going to be removing their buying area. Okay? So if they remove their buying area, then what do you think they're more interested in? That's right, selling. So that's the daily chart. Now we're going to come down to here. Take a look at this chart here for a moment. Just take a good look at that. You see the big drop in price? Okay. So this is significant. This is significant. When you look at price overall, you could see big drops, big drops, big drops, okay? This is institutional selling. This is what it looks like on the chart, institutional selling. And so price was here, institutional selling, down to here. Now, this area that we were looking at to see if it was going to be removed has been removed. All right. And now we're getting a push up like that, which is not unusual. It's very, very, very usual to see this. Okay. After a significant drop like this, retail traders get really, really happy. They start salivating. They start believing, oh boy, I'm going to short this sucker into the weekend, and this is just going to do really nicely for me. They wait for previous lows to be broken through. All the all the things that you see in your conventional trading textbooks, short when you break past lows, all this other stuff, when price hits certain levels, you do certain things. Well, it hit that level, they started getting in short, and guess what? The institutions start reversing it. You know why? Because this is what happens in the market. The institutions sell. They're not going to keep selling all the way down here. They let the retail traders do that. And then when they do that, they reverse it. And then when the retail traders start freaking out with their positions and they start selling their positions, when they start buying them back, I should say, the banks come in and reverse the market. Okay? So keep an eye on that dynamic right now, because this is what tends to happen in situations like this, where the banks are ready to make a significant move. They make their initial move. They break open the chart for a much larger move in the future. And after that initial move, all the excitement from retail traders, they come in and they reverse the markets. So that's what I'm seeing when I'm looking at the euro. Okay. It's opened up the floodgates for a move lower. So if we just zoom out here and take a look at the chart, we're looking at this type of price action here. Okay, holding, a test of this area down here, and now we're coming down here. With this area being removed, we have nothing but this area back here. So down in the 106s, we may get a bounce to the upside from that area, but afterwards, there's nothing to stop price from heading much lower towards the 104s, 102s. But that's going to be over the long term, okay? This is not something that I expect in the short term or even medium term. This is something that I expect in the long term. All right, so that's pretty much what we've got going on with the euro. Now, I wanted to head over here to Twitter, because Twitter's being much talked about right now with Elon Musk not revealing the amount of shares that he bought. A lot of, it just goes to show his character, okay? And when things like this are revealed to us, we should take note of it. And a lot of people like Elon Musk, and I get it, all right? He comes across as the superhero guy who's doing amazing things. He's sending spaceships up to space, and, like, wow, this guy's incredible. He's like so-called richest man in the world, which is not even true. And he's playing with a bunch of toys, and he just makes all these products, and he's like the coolest guy. He goes on Joe Rogan, he smokes dope, like he's just like the coolest guy, right? No, he's the biggest liar there is, all right? You don't trust this guy. You should not trust this guy. This guy is not a person that you want to be trusting. He lied. He kept information from the public. He was accumulating shares from this here all the way down in this price range, okay? Accumulating shares. And this is what we were talking about many times. This area down here was an area where the institutions had interest in buying, okay? So instead of the institutions doing the massive buying, they pass it on to Elon Musk. For what reason? I don't know, okay? But I do know that he got tipped off on where he should be buying Twitter, okay? There's no way that he wasn't tipped off, because we know how to locate institutional buying. Elon Musk is not doing what we're doing, okay? He's focused on other things. So somebody gave him a heads up to be purchasing Twitter down at these lows. So he did that. But the thing is, he had purchased enough that he was supposed to, reveal the information to the SEC, which would mean that we would get the information and we'd be able to buy in at those lows as well. So he kept that. Why? Because he needed to buy a certain amount of shares of Twitter for whatever reason. Don't know what the reason is. Don't really care. So now we see what happened. He eventually came out, reported the information. Twitter jumped from 39 to 50, up in the mid 50s. Not surprising, considering the fact that we had price responding to a buying area of great interest by the world elite bankers. Okay, So we assumed that there was going to be some accumulation. Did we know it was going to be from Elon Musk? No, we did not know that. And so now there's news coming out saying that he wrote a letter to the board of Twitter saying that he has an offer to buy it full outright, buy Twitter outright. And apparently he wrote that if they don't take the offer, then he's going to be reconsidering his investment in Twitter. So you see how excited people get when Elon buys Twitter. 39 to 54. Can you imagine what will happen if he comes out and says, I'm selling my shares? Okay, you can imagine the drop. So is he playing games with Twitter? That's certainly what they're trying to make it look like, right? We're certainly trying to make it look like that. Let's take a look at Twitter for just a split second, shall we? So I take a look at who the holders are of Twitter, top institutional holders. And look at that. They're doubling the information. They made a mistake here. That's a definite mistake. But we take a look at the major holders here, okay? We got Morgan Stanley, Vanguard, BlackRock, State Street. So Twitter is already owned by the bankers, okay? So just to make that clear. So going forward, when you listen to the news and you hear what they have to say, be careful with what they're trying to convince people of, right? Because now the news is trying to imply through the letter that if Twitter doesn't allow him to buy the whole company, that he's going to consider selling his shares, and that would cause a drop in price. I don't know what kind of game they're playing, but just know that Twitter is owned by the big bankers. So why they're allowing Elon to buy shares at this low, I'm not sure what's going on here. But I just wanted to point that out to you because, you know, after the big rally in price, I made a post on Twitter saying, be careful. Anybody thinking about going long Twitter right now, it's a bad idea. Do not even consider it. On Twitter right now, it's a bad idea. Do not even consider it, because at the highs here was institutional selling area, okay? It was an institutional selling area. So who knows? What is very likely that was taking place is, if you remember this area here, okay? This is when Jack Dorsey announced that he was stepping down as CEO, okay? So there's very likely a lot of shares there that needed to be sold. Now, is it the bankers that were holding positions there where they wanted to sell? Big investors that wanted to sell their? Who knows? All I know is that something caused somebody to buy shares down here at a low price. Its announcement was so great that it caused it to jump right into the area of selling. I warned everybody, don't be buying Twitter here. But who do you think was buying Twitter there? Everybody following the news. Again, it's the same routine over and over again. Everybody following the news. Oh, Elon Musk, my friend, man, he just bought Twitter. He's going to change the world. He said he's going to add an edit button, and he's going to, he's condoning free speech, and it's the best thing to ever happen to Twitter. So I'm going to buy it at 54. And by the end of the year, it's going to be 100. No, it doesn't work that way, okay? Elon doesn't give a shit about free speech, okay? He's a lying pack of crap, all right? He was buying Twitter shares down at the lows. He didn't think about free speech then. He was like, no, I'm not going to be free with my speech and let everybody know what I'm up to. So, yeah. So what happened was it rallied up to $54. Everybody and their grandmother wanted to buy shares of Twitter. And guess what? It dropped $10 in a heartbeat. Okay? Why? Because this was an area where people were out there wanting to take profits on their shares. They want to close their shares, close out their positions, sell their shares at $54, $50 to $54. Okay? So there's been a drop in price ever since there. So this leaves room for an even bigger drop down to the 40s, down to this area, because there's going to be a lot of buying down this area when price gets down there. So this is something I want you to be aware of as we move forward. Okay. So what is going to help facilitate that? What's going to help facilitate that drop? Well, we need to take a look at the S&P. And the S&P, this is one that we've been tracking very closely. We've been talking about the moves that the market has been making. We are talking about the big rally that was expected from down these lows. Okay. We talked about the drop that we expected from up at these highs. And also we were talking about the drop that we expected from here as well. In fact, I just recently closed a put position on there that did extremely well. Had a target, which I put forward on April 5th, right here, which got contacted. So what are we watching for now? Well, if I take a look at the 2-hour chart, I just posted yesterday that we are in an area right here. Okay. This is a range that we have with price. And what we have to determine is whether or not this is an accumulation or distribution of positions. There's a good chance that this is an accumulation phase. All right. The odds slightly favor that this is an accumulation phase. And so what we need to see is a nice breakout of this range for price to continue higher. Like this. So by looking at the time frames, we've determined that this range should be short to medium term, meaning it could take several days, several weeks in this range until it breaks out. So what's going to happen is you're going to have institutional buying areas, institutional selling areas within this range on the lower time frames. Some will hold, some will be removed. But until this range breaks through, either to the upside or to the downside, we can't know with any degree of certainty which direction it's going to take. I can tell you that if it breaks below, that we are likely going to get a move straight down here. And if it breaks above, we will likely get a big continued move like this up to very likely new highs from this area, all from the breakout of this range. Those two different scenarios are very likely to break out or play out, I should say. All right, so that's what I'm focused on with the S&P right at this moment is whether there's going to be a breakout to the upside or a breakdown to the downside. Now, can we look at other markets to determine what is likely going to take place? Well, I'll show you what the NASDAQ is looking like. It's in a similar predicament. The only thing that is different, and this is the chart that we were looking at yesterday that helped us to determine that there was going to be a break up to the upside on the SPY. Because if you remember, yesterday when we were looking at the SPY, price was still down in this area here, somewhere here, I believe, or maybe even lower. And what we said was there was likely going to be a push in price. Okay. And the one thing that led us to suspect that that was going to happen was what was taking place with the NASDAQ. So just like with the S&P, we have price stuck here in a range. And this range, again, it's either accumulation or distribution. And it should be a short to medium term, this range, until eventually a move out of it to the upside or down is what is expected. So when I take a look at this chart and I zoom out, I see that the institutions created a nice area of buying down here on the 2-hour chart, and it could very much lead to a reaction like this to the upside. All right. If the banks were going to take the markets to the upside, they would be using this area to facilitate that. So what does that tell me? Well, logically, if they remove this key area that they put into place, that logically tells me that we are likely going to see a drop in price, okay, down to the 13,000 area. And if it gets down to the 13,000 area and breaks below that, we will likely see something like this on the NASDAQ. So that is a possibility, and that is something that I'm keeping my eyes open on right now. If we look at the Dow Jones, there's not much here to tell us what is going to take place in the markets. And if I look at the Russell 2000, again, there's not much here telling me what's going to happen. But I took a scan through just earlier this morning on different stock charts. And what I am seeing is very good indications that there's going to be more weakness. Okay, so this is the beauty about the stock market. All right, this is one thing that I just absolutely adore about the stock market, is that there's always signs of what's to come. If the markets are not showing clear signs of what's to come, then you just look at the stocks. The important stocks, the big players, the ones where the big banks are invested in, because they're moving those stocks all the time, okay? And when you have a basket of stocks that make up an index, many times some of those charts will not be the clearest, but the other ones will be very clear. And I'll tell you, the ones that are very clear usually paint a very, very clear picture of where price is going to go. And with high correlation, if price is going to move in those directions on those stock charts, you're going to see the indexes move in the same direction. So vast majority of the time, you can just look at the indexes and get a good idea of what to expect from the other charts. But, you know, in some certain circumstances, we like to take a look at the individual charts of the stocks to see if there's any indication. And so this one is clearly indicating to us that price is going to go lower. And one of the major indications that we have here is this institutional selling area that the banks created. All right. These are the big players. These are the guys that are dealing in trillions of dollars. Okay. Not billions of dollars, trillions of dollars. These are the guys that are controlling the markets. These are the guys that are buying and selling and moving price. And so this was an institutional area of selling, meaning they created this selling in Apple. And when you combine it with what the overall markets are getting ready to do, it's giving us clear indication that weakness is coming in, okay? So just like what we were looking at with the SPY and the NASDAQ, you know, even though we have situations where price is either accumulating or distributing, we have key things that we're going to be watching for that are going to indicate what is going to come next. Just like what I pointed out on the NASDAQ with that area of buying on the 2-hour chart. That key area gets taken out, guess what? That spells a bigger drop to come. And so obviously I will be looking at that area and I'll be watching it, and I will have alerts set so that if that area gets removed, I'll be focusing on the charts that have clear indications that they want to drop. And I'll be opening up positions on those charts. So there's a handful that I'm looking at right now, and I'll detail them in the coming report that I'll be doing this weekend, which, by the way, might take me a little bit of time because it is Easter. It is Easter. I was looking at the CFTC data, and I was like, please tell me that they're not going to be releasing data on Friday. Give me a weekend off, please. But they're releasing data, so I'll be doing a report, and so I'll be mentioning some of the stocks that I'm looking at in case this market wants to drop further. Okay, if it does want to drop further, there are a handful of stocks that I'll be trading. So Apple is a good one. Apple's a good one. Another one that I will mention to you is also this one here, AMD. Okay, this chart is looking ready and prime for a move to the downside. I was examining it earlier, and it's looking really good. So there's a lot of stocks that I've come across that have very similar dynamics, where a bigger drop is what we're looking at. Okay, when we look at what is taking place on those charts, you always have big institutions coming in, buying shares of a company at a low price. They get the value to increase. They rally price up. They take profits at high prices, and then they create situations within the markets to to help facilitate their profit taking on their long positions, which then fuels big drops in price. But they drop price always to the same spots, to those key areas that we're locating on the charts where they are interested in buying. So when we're looking through the charts, we see a lot of these key areas where the big bankers are interested in buying lower in the charts than where current price is. So that tells us that if the key areas of buying are lower, and really the only people that can influence price so drastically that they can cause it to start massively rallying are the big banks. So if the big banks have their buying areas a lot lower on the charts, then we have to suspect that there's likely going to be more weakness on those charts. All right, ladies and gents, any questions? Anything that you want to have reviewed, maybe? I wouldn't mind taking a look before I let you guys go. Anyone else getting brief pauses in audio? How was the audio during this whole session? Was it good? Was anybody else getting any issues? Seemed to be good. Nobody was reporting anything to me. Audio was good. That's good. So that's what's going on, ladies and gents. Yeah, a lot of weakness I see across the board. So that just, only indicates to me that very good chance that we see a breakdown in the structures on the S&P and the NASDAQ. See, S&P, it broke through that area of supply. It is ranging. It is sitting at a demand area. But could this drop even lower? Yeah, of course, sure, it could. It could. Okay? It's not without question. And we know why. Because we know what's taking place on the weekly chart. We've talked about this several times, right? So, but I think the key indicator here for me would be this chart. Don't forget this chart, this 2-hour chart of NASDAQ. This is the key chart that I will be watching, all right? And Euro. Woo-wee. Euro, looking good. Looking really good for that move lower. Gold, you want to take a look at? So what's happening with gold? Gold rallied, contacted supply, and is now dropping. Look at that. To the T. Boom. Okay? And then a drop. So gold is something that I would not be trading right now. I don't believe that it's going to go higher. I think, they're probably luring people in right now to get in long. And we can take a look at our MyFX book indicator. And let's see what the average position is as we speak. Yeah. Oh, I see what's going on. There's too many shorts. That's what's going on. There's too many shorts in gold. It must piss them off. So they're trying to shift that, I bet. Too many shorts. They're on to us. They're on to us. We gotta make them believe that price is gonna go much higher. How are we gonna do that? I don't know. Let's push price higher and let's get the headlines. Any headlines on gold that you guys have come across? That'd be interesting to see. Any headlines on gold? Wow, you got the likes up to 38. You guys are the best. If we can keep on pumping those likes, anybody that hasn't liked, if you wouldn't mind doing that for us, I'd appreciate it. Any headlines on gold? Wonder if there's anything that's been coming out there. Our view is that gold is going to be dropping. It's just a matter of time until it collapses. That's our view with gold. So The timing's very difficult to tell you the timing. All I could say is longer term, our longer term perspective on gold is a drop. Our medium term perspective on gold is ranging, okay? Ranging, staying in a range. And if you want to know what that range is, it's this one here. That's the range. So medium term, range, meaning multiple days, multiple weeks. Okay, well, you always remember, short term for us is multiple hours, multiple days. Medium term is multiple days, multiple weeks. Long term is multiple weeks, multiple years. Very long term, multiple months. Long term is multiple weeks, multiple months, and very long term is multiple months, multiple years. So our medium term, we suspect that it will stay in a range. Long term and very long term, we suspect that we're going to be seeing a big drop in gold. And this is backed up by a lot of evidence. Okay? I won't go into all of it, obviously, because this is what we reserve. This is the information that we reserve for our students to learn from. Some information is given out. Level 2 students get a little bit more information because they can understand more of it because of what we teach in level 2. And then in level 3, we give the full amount of the information of why we suspect that gold is going to drop in the long term. Why is that? Because of what the students learn in level 3 gives them the ability to understand the evidence that we are gathering with respect to gold. So gold, well, you look at the positions, and February, late February, we had 350,000 up to 364,000. And then what did we say? They're going to take profits on long positions. And what do? They took profits on long positions. So, I mean, we know what they're going to do before they do it. And the reason why we know what they're going to do before they do it is because of the logic behind what they're doing and what they were doing. So when you understand the logic, then you can determine what they're going to do, because it just becomes pretty clear what it is that they are up to. So they are likely going to continue with profit taking on long positions and then start to shift the dynamic to a more bearish dynamic. So, but that's going to take some time to play out, for sure. Okay, it's going to take some time to play out. And oil. Okay, what did we say? Didn't we say that it was going to drop? Right? We said it was going to drop. What did we say? Watch for a significant bounce down here from the 95s. Remember the tweet that we posted about oil? Big rally up from this area. How did we know that? I thought we weren't able to time reversals. Isn't that what the experts say about trading? You can't call the bottom. No. You can't call the top. No, not possible. That sounded like George Bush for a second there. So, longer term, we suspect that price is going to drop. Why? Because the logic that we applied to know that there was going to be a big trap set to get retail traders to buy oil when they were just going to offload their long positions came true, because the logic was correct. And so the same logic that we applied in our understanding there also leads us to suspect that over the longer period of time, we're going to be seeing a drop. Longer and very long term, our forecast is that we're going to be seeing a drop in oil. So it's going to take some time. You got to be patient. But it's pretty clear to us that's what's going to happen. At least from everything leading up until now is indicating to us with about 80% certainty that over the long run, oil is going to drop significantly. Okay? That's what I could tell you. Now, for there to be a shift in that, there'd have to be some dramatic things take place. And could that happen going forward? Sure, it could happen. Okay. 20% chance, if not less than that, that could happen. And why is that? Well, because when you're dealing with institutions that have trillions of dollars, all right, they don't just move the markets, they don't just decide, oh, this week we want to go up. Oh, next week we want to go down. Oh, then the following week we want to go up. It takes a long time for them to accumulate positions. And it takes a long time for them to offload positions. And it takes a long time for them to shift the momentum from being up to down. And so, as long as we see this dynamic progress forward, we know that the chances of our forecasts playing out are very high. So if something different was to take place, there would have to be a series of events in a sequential order that would have to take place for us to determine that there's going to be a different price target or a different situation playing out. And so far that hasn't been the case with oil. Everything is playing out as we would expect, and it's just going to take some time until that eventual drop does take place. So that's gold and oil for you. Okay. Cup and handle completing on gold. Cup and handle completing on gold. Yeah. Cup and handle. Cup and... how's it supposed to look again, the cup and handle? Cup and handle. Isn't it supposed to be like cup and handle? Is that what's supposed to happen? Cup and handle. And then what's next? Drop? Or continued move to the upside? I don't even know. I've read these things before, cup and handle, but I never paid any attention to that stuff. Cup and handle. What typically happens after a cup and handle? Could you tell me? Is it a drop? Oh, sorry, you did right. Cup and handle completing on gold. Classic pattern for push upwards. I regard is as a... oh, my Lord. Wow. Cup and handle pattern. Well, see, I'm not surprised, to be honest with you. Not surprised. Let's take a look here. A cup and handle. Here we go. Boo, 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 boo. What is a cup and handle? Cup and handle price pattern on a security price chart is a technical indicator that resembles a cup with a handle, where the cup is the shape of the U and the handle is has a slight downward drift. The cup and handle is considered a bullish signal. Wow, 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 wow. Yes, indeed. Are they going to give an example? There we go. And who's the great old man? American technician William J. O'Neill defined the cup and handle pattern in his 1988 classic, How to Make Money in Stocks. Yeah. Very much pushed onto the people, huh? This William O'Neill. How many people know this guy? And hey, with all due respect, the guy is very well known, very well respected, by all means. Beautiful. You want to respect him? Good for you. Yeah. Looks like a breakout situation, huh? Yeah, I could see what you're talking about. Cup, down, comes to the top, and breakout. Yeah, and then you look here, and you see that situation taking place. Jump, and breakout. Right as the banks are taking profits on long positions. Beautiful. So, yeah, I don't pay attention to that. And you understand why. Okay? What would you rather pay attention to? Cup and handle patterns that are being created on the charts? Or what the big banks that move price are doing? I think it's pretty clear, right? What you should do? I mean, do you think the bankers, they don't know about this information? Think about it. You don't think the bankers know about this? Right? So, if the bankers wanted to buy gold, and they are the ones that move price, and they are the ones that create the patterns on the charts, if they wanted to buy gold, do you think they would be creating a cup and handle? Sir, I got something I got to mention to you. We want to buy gold, right? And we want to move it up a lot higher. Why are we creating a cup and handle pattern? You know how many millions of books were sold from William J. O'Neill? How to Make Money in Stocks? He told everybody when you see cup and handle, it's going to go higher. So if you want to buy gold, we need people to sell the gold to us, sir. We can't be creating no cup and handle. Oops, sorry. Gosh, yeah, good point. Good point, Jacob. Forgot about William O'Neill's book and all the other books that are out there talking about cup and handles. Good point. We need these suckers to sell to us. So, what's a bearish pattern? Oh, sir, we need a double top. Oh, double top. Okay, or a head and shoulders break. Okay. So let's create the head and shoulders break. Let's go. Do you think that's what's going on? No, that's not what's going on. It's not what's going on. Why do you think everything is so computer generated and automated these days? Because computers do a heck of a good job creating these chart patterns. So, I don't know. Just my thoughts, just my 2 cents, just my analysis. And you take for it what you would like to take for it. All right, ladies and gents, I think that's good. We went 49 minutes. I appreciate you. I appreciate spending time with you guys. You guys have been very good to me, and I'm very happy about the direction the school's been going and how we've been doing as a school. And the students, a lot of students are learning a lot. We're going to be graduating students very shortly to levels 2 and 3. And your support has just been amazing. And let's keep this up. Let's keep this momentum going. 2022 is going to be an amazing year, as I've mentioned before. And so thank you for your support. I really do appreciate it. I want to get the word out to more people. We need to get more traders in line with what's really going on out there so we can help empower them to be financially free in the future, because what's coming down the pike is not looking good, my friends. Not looking good. So we got to find a way to secure our financial freedoms. All right. So thanks again. Appreciate it. Enjoy your families. Enjoy your friends. Happy Easter. And remember what Easter is all about. Never forget Jesus, Jesus, Jesus. Love you guys. Take care.